What's up, guys? So I want to take you through one of my trade analysis of a trade I took today on UJ. This was a beautiful, beautiful setup. So just so I don't confuse you guys, I'm going to go to a complete brand new chart and walk you through why we took that entry, which was a beautiful position. So you guys can see on the 50-minute time frame, we have the market creating higher highs and higher lows, right? Now, one of the most important things I love to look for is identifying when the market officially breaks structure. So based off of this point right here, I drag it across and we can now see that within here, we had a candle close below, right? This gives us the idea and understanding that we have now shifted direction. Okay, we shifted direction looking for sells instead of looking for buys now, right? So now understanding this, we now want to understand where we're going to look for a position, okay? The last thing I'm looking at, my fault, not the last thing. One of the first things I'm going to be looking at is this last candle, this blue bullish candle before the market drops. So I'm going to take this, I'm going to drag it across, and I'll kind of replay this from like this so it doesn't confuse you guys' eyes. But I want to look at this and look from the swing from this high point down here, okay? Now, with this last bullish candle, our entry we're looking for, we want it to be within the open of this candle to 50% of it, okay? So about that, so I can kind of delete the other tool. That's going to be primarily our entry, but we want to look for other confluence to ensure this is a great point to get in opposed to just only taking it off of that. So we have break of structure. We have, this is our last up candle, our point of interest. I'm going to grab a fib from this top wick all the way down to this bottom wick. And when I drag it across, we can see at the 50% of that candle, we have the 88.6 Fibonacci mark. Now, what's also in this area, which I like to trade utilizing, is the 124 hundredth level, which is the institutional level. Okay, so this now lets me know within this full area actually is our full entry area, entry zone. So if you're not taking this on this area, you're kind of just playing yourself. So, but it's based off of looking at this, I know I'm looking for a sell position. Let's say I put it right at the 88.6, right? My stop loss is going to be right above the top of this wick, which I had a 6 pip stop just to narrow it up, drag it across. And our end take profit would be at the 0, which is a beautiful 6 to 1, right? Risk 1% to make 6%, risk 3% to make 18%, or in my case, I risked 5% to make 30%, okay? Now, here's going to be one of our take profit points. At the end of this candle, that's target 1, and then target 2 will be at the 0, okay? Now, I want to show you guys how this trade played out so you can see for yourself. Boom. Start to move. We had entry. This candle here at 6:15, at a close of 6:15, we had an entry. This was like a 1 pip drawdown. So depending on your broker, spread maybe have not let you in, but for me, thankfully it did. And you guys can see we had an immediate reaction off of that and just started to plummet, right? This third candle here should have let you in no matter what broker you're with. If your broker didn't let you in, yeah, it's unfortunate. And we just started to drop, right? Most of my trades, most of my positions were usually in drawdown of 1 pip to 2 pips maximum, bare minimum drawdown. And you guys can see this hit our take profit 1 level, right? Closed out about 75% of the position. And then the remaining, we just had a run in and we end up coming back up here in time being, okay?